guys, it's Imran again from Options Insight. I've got Amol here from Alpha Trades. You may remember him from our 2022 outlook on crypto. And we thought we'd do a little update for you, seeing it's the end of the first quarter, and just talk about what's been going on in crypto, you know, kind of did things meet our expectations, and what we kind of think is going forward, right? So welcome back, Amol.
Thanks, man. Thanks for having me. Excited to have this chat.
Yeah, no worries. So, you know, I remember last time we spoke, you know, we were both a little bit cautious, right? Thinking that crypto was going to have a little bit of a hard time this year, potentially. You know, the market didn't quite rally the way everyone was expecting, and things like Ethereum that had this big narrative around them could suffer some disappointment, right? And we certainly had a bit of weakness early on in the year. So I'll share my screen just so you can kind of see. So here you can see sort of this is going back to start of Jan. You know, Luna was kind of the sole performer, and you probably know more about Luna than me, so we can discuss why that is. Then you had all the other major cryptos like Bitcoin, AVAX, Ethereum, Sol, Phantom, all those getting trashed about 40% into late Jan. And then the market kind of stabilizes and has begun its recovery right over the last month or so. And it's kind of been led by Bitcoin first, and then Ethereum started to catch up. And now in the most recent week, if I zoom in on that, it's been all about Solana, right? Solana's been flying in the last week, probably up about 30-40%. Now they apparently there was some integration between them and OpenSea, the NFT marketplace. And I think that was kind of the catalyst there on Solana. But looking back, Solana's underperformed a lot. So it's still got quite a bit of catch up relative to the other cryptos. So it might be a combination of both of those things from my perspective, right? And then in general, you know, Bitcoin and Ethereum have kind of started to make some strides to the upside. They were lagging kind of other risk assets a little bit over the last few weeks. Since risk assets rallied, and they were kind of waiting for that big March expiry to pass in options. Once that had gone, we've started to move up, and obviously we saw a move up to 48K in Bitcoin. Ethereum got to 34K, and they've kind of stalled here. And, you know, I'm not massively bullish. I think they might have another 10% in them, something like that. But personally, I think we're going to start to meet some resistance if we get there. You know, what do you think about that? Do you think crypto is going to go through a proper bull run here, or are you still relatively cautious?
Man, I'm right there with you. I think I feel like today itself, the volatility on both sides, the whipsaw that you saw just an hour ago, I think that's one of those signs where, like, okay, something is happening in the market. We need to start paying attention. AVAX hit 100. That was my point of, you know, starting to de-risk on some AVAX longs. Solana, I picked up around 85. I cut around 111. Today it's at 127. You know, it's all these zones that we're hitting. They're all resistance points across the board. Mm-hmm. The one thing that I really like about crypto is that most of the market, like, generally comes to a resistance point all at the same time, like typically. You know, and correlations on the downside generally, you know, tend to be 1-to-1. So what I'm looking for over the next, you know, few days is, okay, if Bitcoin is going to rip through like 48.5, it's a clean path towards 52. 58 is like the high zone that I'm really looking at as like, okay, now like something is really happening in the market. 58 is, you know, the point where I would figure it's like an inflection point, break above 58, and I'm pretty sure we're hitting new all-time highs. But as long as you stay under 58, like, I'm probably going to be bearish for the rest of the year. But, you know, I wrote this thread about how, you know, we as traders or investors, we have to look at the market in sort of two different angles and two different timeframes. Near term, obviously, you know, bouncing off the lows, yeah, everyone should be bullish, right? I mean, crypto, it's especially, you can have massive rips in the market, and you do not want to be a bear, or you don't want to be short in those situations, because you don't know which altcoin is going to put in a new all-time high, you know? And if you're short that particular altcoin, like, not only did you miss the bottom entry, but then you just pretty much missed the long entry on the way up, and you just got squeezed to death. So right now, I am just really sitting flat, but bull bias. Like there's no way I would want to be short in the market. Even if it pulls back from here, it doesn't matter. I'd still want to go long and see how far the market could drag it up.
There seems to be a bit of animal spirits retail buying coming back into the market across the board, right? So we've seen meme stocks having a bit of a squeeze. I think AMC was up 45% in a day recently. The likes of Tesla are catching a bid. The likes of the ARK Innovation ETF up 40% from its recent lows. So I think, and I've seen some retail data. I've seen some data confirming that retail have been buying this equity dip, right? So that makes sense that should translate a bit through to crypto, right? Because that's the same kind of cohort of investors who like to buy it. I mean, we've definitely had some institutional buying, no doubt. We knew that was coming, with all the rise of all those big platforms that were going to be custodians of Insto. And I think as we were seeing that weakness at the earlier part of the year, part of what prevented it from really cracking down when the Russia invasion kicked off was that institutional bid that was kind of under there, just happy to soak it up as the market came there into the mid 30Ks in Bitcoin. But I don't think they're going to chase it higher. I don't think institutions are going to chase it higher. I think institutions are aware the macro backdrop is pretty weak. Crypto is not going to escape that backdrop. And as we get a bout of weakness in risk assets at some time in the summer, maybe, should it come, then crypto is going to come down and they're going to get filled on the rest of their order, basically, right? But they might be in it with a 3 to 5 year view, but I don't think they're going to chase it unless we really take out those highs at like 60K plus, where they're like, oh, actually, this thing's decorrelating from other assets and we haven't got filled. We need to, accelerate that buying, basically.
Yeah. And Robinhood actually spit out some data, or someone had posted about it on Twitter, that you're right, like retail buying is starting to come back into the flow. And Sentiment Feed, which for crypto, they do analysis of general sentiment as well as volume analysis. They're starting to see, small to mid-size accounts come back into the mix as well in crypto. And then on the NFT front, same thing. I personally think that in the current market conditions, the NFT market is the best gauge for how aggressive or how much greed there is in the market. Or how would you say, like, I don't want to classify retail as dumb money, but really, like, they are. And you see a lot of NFT projects still being minted, basically being sold out, in minutes or hours. And over a month ago, that was not the case. The volume landscape was like drying up a little bit. Now, as you mentioned, Solana partnering up with OpenSea. These are really where, the signs like are coming back into the market. Okay, retail is slowly, dipping their toes again. So yeah, it's really interesting to watch all this kind of pan out. And then at the same time, I agree with you. The macro backdrop is so weak. I don't see any way that we're going to escape just the very choppy bear market rest of 2022, or even headed into first half of 2023.
Yeah, I mean, on the macro backdrop, for those who aren't really familiar with why we're so concerned, I mean, my issue with that is just the amount of tightening that is starting to get priced in, right? You've got now 9 or 10 hikes if we go by 25 bit increments. The point is, it's quite likely we're going to see 3 50-bit rate hikes in the next 3 meetings from the Fed, right? That's how worried they are about inflation expectations have become unanchored, and the need to really they're so far behind the curve, they need to get some credibility back, right? So the market's pricing that in. You've got QT, right? Quantitative tightening, so reducing the balance sheet. That's going to get announced in May or June. These type of things, when they get announced, the market will have priced some of that in the rates market. But the truth is, what tends to happen since QE began was that equities are no longer a forward discounting mechanism. They seem to price good news in as a forward discounting mechanism, but bad news, they almost wait until, the actual selling, wait until like the last minute. I mean, you look at what happened with coronavirus, right? It was shrugging it off January, February, and then you only got your acceleration in March, where you just could not deny the fact that every single country was going to lock down at the same time. And finally, equities reacted, and they reacted really fast. So I kind of feel like we may be setting up for something similar in the summer, where you get this combination of Fed aggressively hiking, balance sheet reduction, credit market cracks appearing, and that starts to lead us lower. And then all of a sudden growth data is rolling over at the same time. And you're just like, there's really just nothing to cling on to. And earnings guidance maybe even starts to come down as they factor in consumer demand because their disposable incomes are falling. Consumer demand is going to drop. Corporate earnings are going to drop. Wages have obviously been a bit sticky to the upside now. Producer prices are up because of the commodity shock. There's just so much bad news. It's unbelievable, right? And I don't think crypto is going to escape that.
No, I don't think so either. It's definitely going to be a tough year to trade for 2022. But
well, not if you're short. Not if you're short.
Yeah, right. Exactly. So let me push back on you there. Okay, so let's just say, for those viewers that are watching, they're probably like, okay, look at these two fucking bears, right? Because we see the macro backdrop, and okay, maybe you just want to ignore everything that's happening in the world, and you're like, you know what? Crypto is the asset class of this decade, and it's going to redefine and decorrelate and everything. What are the bullish points that you would add, or what would you wait for something like that to happen, where you think that, hey, it's possible that the whole world may be falling apart, but at the same time, crypto would be going up? If someone asks you that question, like, how would you answer that?
I think you definitely need to see the decorrelation in the data, right? So in the price data, you can look at the correlation, and the correlation this year has been quite high with risk assets, right? Correlation to NASDAQ was quite high. It had some brief moments of breaking down around the Russian invasion because people were like, oh my God, it's seizure proof. People are going to need to put all of their rubles into Bitcoin. And it had a bit of a pop on that, but then that got unwound and the kind of excitement died off, and it just got back to its risk asset correlation. So you need to see consistent decorrelation away from risk assets, right? You need to see faster adoption from countries. You need to see basically people making it legal tender all over the place, right? On a large scale. You'd need to see central banks even talking about holding it as like an alternative to the dollar and the gold, basically, right? If you start to get that sort of news flow, yeah, you can decorrelate and it can do what it's meant to do. And I'm not a bear on it. Like I own it, right? I own Bitcoin, I own Ethereum. I don't own a shit ton of other stuff, but I use optionality. I have used historically optionality to participate. I've also got some core holdings, and then I use optionality to hedge myself when I'm nervous that a correction is imminent or likely, basically, right? So I'm not telling people to go out there and short the shit out of crypto. I think that would be insane, right? I think you have some exposure. If you're a believer in it being the future of money and it being an alternative, some kind of protection to fiat currency debasement and a potential alternative financial system that's going to be built over the course of a decade, there's definitely a case to own it. Just be aware that in the short term, it's going to have some correlation to risk assets. And we are in a very special year where risk assets could have a very tough time, right? And I find it hard to see in the next 6 months that suddenly enough's going to happen in crypto for the likes of Ethereum and Bitcoin, at least, to decorrelate from risk assets. You might get other cryptos, right? Whether it's in the GameFi space or whether it's in alternative layer ones that are just innovating so much that their adoption rates are just flying and a load of new users are coming in and they can rally in the face of everything else not rallying, right? That's very possible. But I think the big established large caps like Bitcoin, Ethereum, they need more time to decorrelate from risk assets. And I don't think the next 6 months is enough. That's how I would phrase it.
Yeah, totally agree. And crypto as a whole, I feel like is cyclical in nature, in that when Bitcoin and Ethereum are pulling in volume and pulling in interest, I think that actually starts, creating a waterfall effect into other altcoins. I don't think other altcoins develop or build volumes or build interest on their own separately to what's happening in the broader scope of crypto. We have not seen that over the last several years. Because I think the flows themselves across the board are all tied together. And I think that's particularly the reason why some altcoins are trying to really set themselves apart from the rest of the crypto space. I think NFT space is just like one of those segments that's trying to do that. Over the last several months, one thing I've noticed in NFT is that, it has not generally tended to go up or down with crypto. And same thing with something like Luna, which is generally most cryptos are tightly correlated with Bitcoin. Luna actually has some of the lowest correlation with Bitcoin, partly because of its own stablecoin mechanism, and what we'll get into Luna a little bit more. But point is that these altcoins are recognizing that, hey, if we tie ourselves to the broader scope of how crypto goes through its up and down, ebb and flow cycles, we're screwed. Like, we might have to go through multi-year drawdowns. And does that mean that our community gets abandoned? Do developers leave? Does the interest wane? I don't know if most people in crypto who started like a year or two are ready for something like that. No one wants to believe that we can have a bear winter for another 6 months or a year or 2 years.
What's your take on Luna Treasury buying a load of Bitcoin on their balance sheet? That was arguably one of the biggest catalysts in the last week or two to like help Bitcoin really move through those resistances at 45, 46K. What's your take on that?
Man, they're buying about $10 billion, right? 125 million a day or something like that. I think it's a really interesting strategy. I'll be honest, like at first, I really thought that this was like a Ponzi building within a Ponzi. And I don't hate on Do Kwon for anything like that. Like, I think he's a really smart, original guy. But point is, like, when you look at the mechanism of what they're doing, I think they're starting to realize, like, okay, the APRs are not sustainable, right? They know that the UST to Luna peg, the way it works is, so you have UST, which is a stable coin, then you have Luna. The more money that gets placed into UST, the more Luna gets burnt. If, however, UST starts to come under a pressure of depegging, meaning 1-to-1, right? UST is a stable coin, so it's pegged to $1. If it goes into the pressure of depegging, then the argument is that Luna will start getting sold. So if Luna starts getting sold and it starts taking a dive, then you have a further, sort of negative cycle that pulls more UST and starts getting sold. And then it creates another issue, which is now that they're buying Bitcoin because they know that, hey, this is a possible scenario, the scenario that I just talked about. Okay. So they're like, okay, how the hell do we avoid this shit? They're saying, okay, well, let's buy something a little bit more insto friendly. Let's buy Bitcoin, because Bitcoin does not just dive 50, 70, 90% like other altcoins do. And at the same time, the depegging risk will be significantly less if people realize, hey, we have $10 billion in treasury to hold that peg for UST. That's basically the only purpose of them buying this Bitcoin. But now the problem is, you've now got 3 separate scenarios where everything could start breaking down together. And this is something that a few people have mentioned, where they realize the only reason Bitcoin is getting bought right now is to maintain the treasury float for that UST. The LFG Foundation is simply doing this because they know that this is a problem that can happen. So you buy the Bitcoin and you make sure that if the situation happens where UST starts getting depegged, Luna starts getting sold, and it creates this, negative cyclical effect, well, then we still have this Bitcoin reserve to possibly sell onto the market. Now the problem
is, what if Bitcoin price goes down as well?
That's exactly the point. So you get it. Now you have a $10 billion gorilla in the room that may get sold and dumped onto the market to maintain the peg of a stablecoin. Yeah,
that's not without risk, right? I mean, Bitcoin's the volume Bitcoin has dropped to 40% recently, and realized it's still a 60, 70 vol asset that you're sticking on your balance sheet in the interest of stabilizing things. I don't know about you. Being a vol trader, that sounds a bit weird to me. If I want stability, I go to the lowest vol thing possible. I don't go to a 70 vol asset for my balance sheet, right? So, yeah, I mean, I think they take a big punt there, basically.
It's a huge punt. And, to finally wrap this up, so I heard his interview with Laura Shin, and she did a really great job as a journalist to ask tough questions, as well as, to really ask Do Kwon, what exactly are you doing here? And I didn't like one part of his answer, which he said that if UST as a peg fails, then he believes that crypto as a whole, possibly fails too, like associated with Bitcoin. I don't think that has anything to do. Well, one has nothing to do with the other. Like Bitcoin and crypto will be just fine if Terra Luna Foundation dies. Like, no offense, but we'll be here long after you're gone. Right.
Yeah, agree. Totally.
So the point is, like, at the same time, though, yes, he will create a significant pressure on the market if that situation were to arise. And I really hope it doesn't.
Yeah, and I heard something about him wanting to own as much, if not more, Bitcoin than Michael Saylor, for example, right? Yeah. And
he will, like, after this 10 billion is done.
How much does Saylor own? Do you know?
I think Saylor owns close to like 4 to 5 billion, if I'm not mistaken.
Yeah, and this is the problem when you got these big concentrated longs, right? And they're not like just high net worth gazillionaires who are just like, we never need to sell this. They're doing it as part of a business. They're doing it as part of a corporate, like Saylor's doing it as part of MicroStrategy's treasury. These guys are doing it as a trade. So the problem with that, and I'm no expert in these matters, right? But when you're not doing it with your own personal wealth and you're doing it as part of a corporation of some kind, when the shit hits the fan, you might become a forced seller, right? And you might be forced to liquidate because, your board tells you we have to do this, right? We have to liquidate, right? We've got debt against this shit that we need to make good on, like in the case of MicroStrategy. And it's just, that's quite worrying. For me, that's fragilities building in the system with these big whales that are not just like, we can hold it till if it goes to zero, we'll hold it. So what, right? They might be the ones who accelerate a capitulation at some point. Who knows if it's this summer, where risk assets are selling off, Bitcoin approaches that 30K level and just gets dumped down to 20K and beyond because these guys have to sell a load of it, basically, right? So for me, there's a lot of risk in that scenario that the market probably isn't pricing or thinking about. And being an options guy, I'll be looking to structure positions that are relatively neutral, but in an acceleration down to the low 30s, that they will benefit from like that thing breaking, because I think you want to be careful about those forced sellers coming in. Yeah.
I completely agree with you. I really think that a lot of crypto is sort of woefully unprepared for a dragged out, crypto winter or bear market. Like we've seen crypto bear markets, which are brutal in itself. We've not seen sort of, a bear market from like a global recession slowing down standpoint.
Yeah, exactly. And if S&P is down 30 or 40%, which is not beyond the realms of possibility, right? What the hell is crypto down, right? It could be 60 to 80%, right? Possibly. That's not to say it's going to stay there, but you want to have dry powder. For me, it's about staying in the game. Like if there is a possibility, right, that we could be down 60 to 80% this year in crypto, I want to be able to add down there. I don't want to be cutting, right? And the only way I'm going to do that is if I've got smart hedges on the book, basically, right?
Totally. Yeah, totally agree with you. I feel like we've made this chat very depressing for a lot of people.
It does sound a bit bearish. It's true. So tell us something bullish about crypto. What are you optimistic about in crypto?
I mean, listen, the work hasn't stopped, right? Like crypto is still growing as a whole, even though, in the near term, we're bearish. It's not like you and I are people who doubt crypto and its, need for existence. Like, I think we're bulls for the long term. And, those people that are watching should recognize like, hey, we are real crypto bulls because we believe in the actual technology. Yeah. As much as we want to shit on price right now or what may happen in the next 6 months to 1 year of macro, none of us want a brutal bear market. It's not like we enjoy losing money. It's not like
it's the trader in us that makes us a bit bearish right now. But it's like, I agree with you. I wouldn't have got involved in any of this stuff if I didn't think the technology was worth, getting involved in, right? So, I mean, and, the Ukraine stuff has really opened people's eyes to, there's a use case here, right? People have raised how many millions to fight the war, to do protests, the Canadian truckers protest. They raised a load of money in crypto very quickly from all over the world, right? There's a use case. apparently there were a couple of, I found this story hilarious. There were a couple of journalists who went to Ukraine and they bought a car using crypto so they could drive around and stuff because they couldn't actually access any money in the country, right? So they couldn't use cards, they couldn't use anything. So the only thing they could transact with was Bitcoin. So they bought a car with it, which is amazing. So yeah, if you've got real life use cases happening in the extreme. Now, if that became more normal, right? And more countries were like, went down the El Salvador path and made it legal tender and had a shitload of cash points and encouraged people to adopt it, then yeah, you know, this thing can really be the future, but we're not there yet. Governments are going to have some trouble getting their head around that. And, you know, there might be some resistance because it might be competing with CBDCs, which are clearly where governments want to go by the looks of things. So who knows, right? But, you know, that's kind of my 2 cents.
Yeah. I think to just sort of drop some alpha, and I'm sure, you know, you kind of look at the market the same way, which is that markets tend to go through these exhaustion cycles, like up and down, right? That you will have sort of these scenarios where markets are really, really bullish to the point where things just don't make sense anymore. In my opinion, I think we had that in like 2021. And then markets will also get, you know, very destabilized to the downside where things are so, you know, undervalued that it also doesn't make sense anymore. And I believe that we're somewhere in the middle of those 2 points right now. And I personally think that we need to go test that downside of how undervalued things can get and where big investors just start to realize like, there's no way that this thing should be priced at this, you know, particular price point, right? A lot of people in crypto, however, sadly think that we still need a big blow off top in the market. And this is a common like sentiment, which I don't quite understand, because if you look for 2020 and 2021, like if you paid attention to the right stuff, you would have 100x your portfolio very easily. Like a select few altcoins. I mean, it wasn't even that hard. Like a monkey could have done that by just picking like 5 random things. But now you're getting into a situation where those that did not make, you know, say big portfolio highs, or maybe they just chopped themselves to death over the last year. Now they're thinking like, how far can I go out on the risk curve and make it all back? Or maybe they're just saying like, okay, well,
it's the hope strategy, isn't it? Right.
It is a very irrational hope. And, you know, I'm hoping that some people that watch this realize that you don't really need to be, you know, trading in this middle of the cycle and trying to make it all back now. I promise you, like, your money will be better off, probably more so in your pocket right now, for unforeseen circumstances that may come up later this year, to be able to take care of your family, or to be able to just have dry powder, as you mentioned, on the side to, you know, buy those big capitulation events.
I mean, there's some nice option strategies you can do to participate in upside without risking too much, right? So call spreads, those type of structures are a pretty nice way to participate in crypto. Like you can do a 3 or 6 month call spread in, you know, and now you've got liquidity in the likes of Solana, on Delta Exchange. You've got obviously Ethereum and Bitcoin on Deribit and things like that. US guys struggle with Deribit because they can't sign up there, but I think in Canada you can. So I don't know what the venues are for US, to be honest, but then you can use some of the proxies, right? You can use MicroStrategy as a Bitcoin proxy or whatever and trade options on that. But I just think like longer dated call spreads are an easy way to get like 4-to-1 type leverage on a continued rally in crypto without risking your shirt, basically, right? And I think that's a nice, easy way to do it if you get yourself educated around options and understanding what they are and why they give you that asymmetric profile, rather than just piling all your money into crypto at, like what you say, is quite a mid-range level where it's not really clear. Like if you look at some of the on-chain metrics, you know, they look at previous capitulations, right? And they've got a ton of metrics, right? But some of the comparisons they're doing, like we haven't seen the type of capitulation in recent times that we saw in major market bottoms in crypto yet, basically, right? So for me, I want to see that. I want to see that type of pain, that type of liquidation happen some point this year to make me think, okay, that's a major bottom that's been put in place. And now we can have a proper 2 to 3x run again. And then I'll put fresh money into the market, right? That's kind of how I'm thinking about it.
Yeah. So I'm gonna drop one last piece of alpha just for people who are thinking that, what the heck do I do in crypto right now?
Mm.
If you pay attention to the crypto space and you realize like where the space is going, the space is going towards a multi-chain world. And by multi-chain, I mean that a lot of people start to realize that Ethereum was a big problem with network congestion, high fees. So then they came out with these separate L1s. Avalanche did very well. Solana did very well. Phantom did really well. But then now you have like all this, it's like this compartmentalization that's happening, but then money's spread everywhere, risk is spread everywhere, and there's not too much like easy movement from one chain to another.
Mm-hmm.
So I believe that the next big step in the space is going to be bridges.
Mm-hmm.
Now, the sad part about bridges is that they are so vulnerable
to get hacked,
that
right?
it's literally, they get hacked. Obviously, you've heard Wormhole, $250 million hack. Ronin Bridge the other day, $650 million hack.
Yeah,
These are the biggest hacks in crypto history.
Yeah.
Now, the point is that through everything, we know that if crypto is going to a particular point, it is this, because you have to figure out some way, even if you have to go through multiple more hacks, this is where the space is going, because people want to be able to move back and forth across chains, to be able to take advantage of, staking APRs, to move NFTs, to move money, quick and seamless manner. This is where the space is going. So I would highly recommend that people look at Synapse Protocol, Stargate Finance, right? They haven't gotten hacked yet, so that's good, but maybe they do in the future. And if they do, at least like you can depend on these two, because they have pretty good teams. They have good backing. This is not like, some Anon like developer that came out of nowhere. They actually have A16Z and Alameda Research and Binance Ventures, Coinbase Ventures backing them. So these guys know like, okay, one of these bridges has to succeed, or else like, what the hell are we doing here? We can't just be operating on separate chains forever, right? So I think that's the one thing that I would tell people is check those two out.
Amazing. That's the kind of alpha I would not have a clue about. So I really appreciate you mentioning those. All right, it's probably a good time to call it a day. That has been our Q2 update on crypto. I get the feeling we're going to do this every quarter. Why not?
Hope so.
It's been a pleasure having you on, man, again. And I'll speak to you soon. Yeah.
Sounds good. Take care, everybody.
Cheers, guys. Thanks for listening.